Let's talk about dividends. What are they and how are they taxed? Hi, I'm Dave Lopez.
And I'm Chase Lopez, and this is another episode of Retire Your Way with ILG Financial, where we talk all things retirement planning. Now, Dave, before we jump in, want to let everyone know, go ahead and hit the like and subscribe button down below. That way you get alerted for any future videos that we put out.
Let's jump right into it.
Let's do it.
Okay, what are dividends? Dividends are basically earnings from a company that you own stock in. So remember, when you're a shareholder, you're a part owner in the company, and the company makes money. And one of the ways they'll take the profit is they will redistribute it to their owners, to their shareholders. So a dividend can be a partial payment out of earnings for the year.
Yeah, so there's two types of dividends, right? We've got what are called qualified dividends, and we have what are called unqualified dividends. So let's stick with the qualified dividends for now. In order for a dividend to be considered qualified, there's a couple of criteria that you have to meet. Number one, the dividend has to be paid out by a U.S.-based company or a foreign-based company that has a exception, basically. So that's the first criteria. The second criteria is there is a roughly 60-day window, and we're not going to get too in-depth today about that because it can get a little bit in the weeds. But essentially, there's a 60-day window that you have to hold the stock in order for those dividends to become qualified. So if a dividend does not meet that criteria, then by definition, it is what's called an unqualified dividend. And we'll get into the how those are taxed a little bit differently here.
Yeah, the reason they categorize them differently is they're taxed differently.
Right.
So an unqualified dividend is just taxed the same way the interest in your bank account is taxed. Ordinary income, whatever your income rate is on your tax return, it's considered the same type of income. And that's usually the higher type of income you would pay.
Right.
Ideally, you want your dividend to be a qualified dividend because it's on a different tax structure, and it's usually almost always a lower tax structure. So let's take a look at the graph. Here's the tax structure for not just qualified dividends, it's also the same structure for long-term capital gains.
That's right.
But that's a different video.
Yes.
Okay.
Yes.
So as you can see from the chart, if you earn, if you're single, if you earn under $48,350, if single or married filing separately,
and that includes the dividends.
And that includes all the income, including the dividends.
Right.
Then the tax rate for your qualified dividends is actually zero.
Right.
Okay.
So you could have a tax-free dividend.
That's exactly right. That would be an example. If you've ever heard a friend or someone say, hey, my dividends are tax-free, this is usually what they mean. Because of their income, they're in the 0% tax bracket for their qualified dividends. Okay. If you're married, 96,700 is that limit for your income, including the dividends. So the next chart would be if you make over, if you're single, 48,351,000, but under 300,000, then your dividends are taxed at 15%.
Yep.
Okay. For a married couple, if it's over $96,701, but you're under $600,500, you can see on the graph, then your dividends are taxed at 15%. And if you're over those numbers, then you go up to 20%. So often the 20% tax rate is still cheaper than your ordinary income tax rate.
Absolutely. So I think that was where I was going to go with it, right? Is these qualified dividends, by utilizing these new tax brackets, you're actually going to be paying less tax on these dividends when you compare it to the unqualified dividends.
Now, the good news is you don't have to figure it out. Whoever holds your stock, your custodian, Charles Schwab, whoever holds it, they send you a form at the end of every year, 1099 DIV, and it'll actually break down exactly how much dividends you have. They're called ordinary dividends. Right? Which is all the dividends, qualified and non-qualified. And then on that 1099 DIV, it will actually break down the qualified dividends that get the special tax treatment.
So if you have any questions about if your dividends are qualified or if they're not qualified, we strongly suggest you get with your financial professional and with your tax professional to make sure that all of that is being correctly recorded for your taxes. Like I said before, go ahead and hit the like and subscribe button so you get alerted for any future videos. We'll talk to you next time.